Hello everyone, welcome back to my class. Today we'll be doing with the chapter Accounting for Share Capital. And that is recording of transactions. It's relating to that of shares. And when we talk about share capital, it means we are talking about the company form of business. Now, before we know how to record your share capital, how to go about for the issue of shares and others securities, let us first understand what do you mean by a company, because when you talk about share capital we are talking for a company form of business. Yes. uh, Now when we say a company, we will be talking everything in this chapter as per your Companies Act of 2013. Yes, it defines a company as a company which is incorporated under this act or any other previous law. Now, in a simple sense, in a layman's language, if you say what is a company, it's a legal entity which is formed by different individuals to generate profit by carrying on their commercial activities. As you all know, you have other forms of business also, sole proprietorship, partnership. Yes, so this is another form of doing business. But why it has come into existence is that in case of sole proprietorship and partnership, what we find, although there was a problem to expand the business because of limited managerial capabilities, limited capital available. But on the other hand, the liability of all the owners or the partners was unlimited. To overcome such kind of difficulties, we have a company form of business for doing your business. Now, so company, as you have already learned, the company is a company which is incorporated under the Companies Act of 2013 or any other such law. But to be a company, it requires certain distinctive features or characteristics. It has certain distinctive features or characteristics, and let us now first discuss what are those features or characteristics so that we can clearly understand what do you mean when we say it's a company or it's a company form of business. The first characteristic is it's a separate legal entity. You have to understand is that in India, a company comes into existence only after it is registered with the registrar of companies or any other legal authority. Yes, once it is registered, it becomes a separate entity which is separate from the owners. Yes, it can raise its own loan, it can open its company bank account or incur liabilities. That is, it gets all the features or characteristics as which rights and powers which is similar to a human being. That is, it is also said to be an artificial person. Now, second characteristic is that it's a perpetual succession. That means since it is a company is created by law, it can only be brought to an end or wounded up or closed down only by the act of law. Yes, as a result of which, in case of a death, insolvency of any of its members or shareholders, it doesn't affect the continuity of or the existence of a company. Yes, the shares may keep on changing hands unlimited times, but this will not affect to the continuation of business of a company because it is separate from the owners or the members who run it or who own it. It has its own separate existence. As such, it is not affected by the death, insolvency of its members. Next, as we have already, it's an incorporated association. That is, it has always to be registered. A company to come into existence has to be registered with the registrar of companies. Next, we have, as we have said, it's a consequence of your point number 1 and 2 that it has a common seal. That means since it's a separate league, it has its own identity, it has a proper, so it has so any and all the board of directors or other management bodies run the company on its behalf. As a result, the company has to show its existence on any paper that it has entered into a contract. It has a common seal. The company proves its name or its existence with the help of the seal. So every document that is transacted between the company and any other third parties has to bear the seal of the company. But there is an exception to this by the amendment of the Companies Act in 2015. This common seal has been brought optional. So in any authorization on behalf of the company can be done even if it doesn't have a seal. Yes, so this has become optional, but still it's one of the unique characteristics of a company. Next we have what was a limited liability, which is an advantage over the partnership form of business or your sole proprietorship form of business. That the liability in general, the liability of the members or the shareholders of a company is only limited to the value of the shares owned by them. Now this, for example, let me cite an example. Now, suppose the value of your share that you have bought in a company is rupees 100. So a company can ask from you only rupees 100 and nothing more than that. Yes, now remember here the company doesn't collect the full value of your share in one go. Suppose the company you have paid up in a company of a share worth rupees 100, you have paid up only rupees 80. So the company in case of need of funds can only ask you the remaining 20 rupees and nothing more than that. But in case of limited liability, this is a general, that is the liability of the shareholders or the members is limited only to the nominal value or the face value cost of your shares. Yes, nominal value of the shares. But there can be other exceptions, that over and above the shares, a person, the shareholder or member of a company can guarantee that in case of winding up, it can only happen in case the company is closed out, there is need of funds, a member may guarantee that over and above the share capital, the person guarantees the company a certain amount of money. So those companies are known as company limited by guarantee. That is, the members, in case of winding up, provide certain additional amount. Yes. So these are known as in case of company limited by guarantee. And there's a third type of company in case of liability is concerned. It is unlimited. This is very rare. But still you should know that here the liability of the member is like that of sole proprietor and partnership business forms of business, that is liability is not limited. And it's unlimited. So in case of paying off the debts, it can even go off to the private properties of such kind of members. But this form of business are very rare. Last but not the least is the management. In a company form of business, the ownership is separate from the management. The day-to-day business of the company is run by a board of directors, but members of this board of directors are elected by the members themselves. Here, so ownership is separate from the ownership is separate from the management. Here, it is carried on by a separate set of persons, but these members or board of directors, as we commonly know them as, are elected by the members themselves. So these are, you may find some more features, but these are the main distinctive features of a company form of business. One is a separate legal entity. It has a perpetual existence. It's an incorporated association. It has a common seal. It has a limited liability, and it has a separate management is separate from its owners. I hope by this you can understand when we call a company, what are the features or distinctive characteristics of this form of business. Thank you. That's all for today. Thank you.